Alrighty. Hey, everyone. Thanks so much for joining us today for this webinar. I know we still have a lot of folks slowly trickling in as we get going. But today we have slightly more positive news than we've shared in the past few webinars. We're seeing more signs of recovery. So we'll be kind of diving deeper into those trends that we have been seeing, talking a lot about what the market has been doing, talking about how you can analyze your own market, and a lot of the new tools that we have coming up to make that process a little bit easier. So just some bookkeeping notes before we get started. My name is Oliver Marzinski. You might know me from previous webinars, and with me today, I of course have Anurag Verma, one of our co-founders here at PriceLabs. Perfect. And if you can't currently hear us, make sure you click that dial in button. That'll make sure your audio is kind of coming through. Otherwise, if you can't hear us, make sure your audio is on here. Otherwise, as we go through the presentation, if you have any questions about anything we bring up, please use that Q&A button at the bottom there. So please use the Q&A over the chat. That just makes things a lot easier to monitor. We will be watching the Q&A, but the chat not quite as much here. And then if at the end you do have any specific questions about your location, about anything we covered, how to kind of implement these things on your own, do shoot us an email at support@pricelabs.co here. So they get you the quickest response, and we would be very happy to field all those questions. And of course, this webinar will be recorded, and a few hours after we finish here, you should get a link with that recording. So if you do have to leave early, no worries, you'll get that sent straight to your inbox here. Quickly going over the agenda, we'll start by kind of reviewing some of the current recovery trends we've been seeing for North America and Europe, breaking that down into the vacation rental versus urban markets, just to give you an idea of what's going on in these different segments. And then we'll be talking about different pricing strategies for different situations that we see within this data. Then we'll kind of pivot to analyzing your local recovery with market dashboards. So all of the trends that we're going over today, those will be slightly more generic on the kind of macro scale of what's going on in the vacation rental world, whereas we'll be showing you how to look for those actual trends within your own market and how to react to those. And then since COVID was kind of had such a drastic toll on booking demand, ADRs, and things like that, we'll go over settings to check after COVID. Once you're in recovery, I know a lot of you set different manual overrides and things like that. So what to look for here. Talk a little bit more about where our market dashboards are going with Market Dashboards 2.0, and then we'll open it up to some questions. So very packed schedule here. It's going to be a lot more content focused than the past few webinars. So Q&A might be a little more limited here, but jumping right into it. Anurag, do you want to get us started with these booking trends?
Yes, and actually I would prefer to share my screen if that's okay with you.
Yes, stop sharing, go for it.
I don't think I can share my screen. I'm okay with you sharing, that's okay.
Okay,
yeah.
Sorry about that. In that case, I am back to sharing. Awesome.
Sounds good. All right, thanks everyone for joining. Like Oliver said, this webinar has a lot more focus on data and content and strategies for what to do with this data. So the first segment here is about 5 or 6 slides that all have a very similar theme. What we have done is we have broken down the North American and European markets by urban versus destination or vacation markets, and trying to see what kind of trends we are observing in each of those segments. This, of course, leaves out Australia, New Zealand, Asia, Africa, and South America. We will try to put out a blog post that covers those markets as well at some point. But for this webinar, we wanted to sort of keep this a little focused on these 4 market segments. All of this data is coming from listings or properties that use PriceLabs. So this is real reservation data that we are tracking for all of our customers. The first set of charts that we want to look at is just the total number of bookings. So this is regardless of what the length of stay was, regardless of what the lead time was, we are just saying, hey, how many total bookings came in? we did break it out by segments of length of stay. So for example, you will see pretty obviously that in all of the 4 segments, demand started really sharply dropping somewhere in March. But what we are observing is in vacation rental markets in North America, now there are more bookings happening than pre-COVID. And on the flip side, in urban markets in Europe, the recovery is much more muted compared to pretty much all the other 3 segments. What we're seeing is the urban US market is still recovering, and it's still doing reasonably well. It's still trending upwards, and we're hoping it will come back up soon enough. The destination or vacation market in Europe is also beginning to show those signs, really hoping that urban Europe market also does the same soon enough. So this is looking at just the number of bookings, which can be slightly misleading in some ways, because it's not paying enough attention to how many days were actually booked, because each booking, regardless of the length of stay here, is showing as one data point here. So the next slide will actually go into what the total number of booked days was, and the way to do this for us is every booking is weighed by how many days it contained. So if there was one 60-day long booking, then that's showing an equal weight to 60 one-night long bookings. Whereas the previous one was pretty much focusing on the number of bookings, so it would show a lot more shorter bookings. So here you'll see a very similar trend that somewhere in March, things started dipping down, but it's not as drastic here, probably because at least in US urban markets, it's the starkest. You'll see somewhere at that time, these midterm bookings really shot up. And although the volume of bookings came down a lot, the total occupancy wasn't as far down, at least in the US urban market. I think in European urban markets, it still shows fairly far down. That we had seen this in the past webinars as well, that midterm booking trend that we saw in North America did not really materialize as strongly in Europe. In US destination vacation rental markets, that trend is still there. There are more midterm bookings, but not as strong. We are seeing some of that trend continue, but in future charts where we actually break this down as percentages, you'll see we are going back in terms of length of stay. We are beginning to go back to pre-COVID levels. So in some ways, that's saying, okay, market is beginning to move in the short-term rental direction again. So we looked at occupancy in this chart, and one of the things I said was, hey, it seems like although the number of bookings came down, the occupancy didn't really go down as much, which seems like good news, but there is something else hidden there, because occupancy itself doesn't really paint the whole picture. What also matters is what was the average rate those bookings were coming at. And this one is comparing the same 4 market segments and saying in every month when these bookings were made, what was the average nightly rate for the bookings. And you'll see that from February to March, pretty much everybody dropped. And then other than the North American destination markets, which are now showing more demand than there was back in February, all 3 markets have suppressed ADRs or nightly rate books. So in some ways, that's telling you that, okay, March and April might have not gone as much down in occupancy, but the ADRs also went down, which meant the revenue has to take a bigger hit than just what occupancy would show. In all of these markets, we are beginning to see those ADRs trickle back up a little bit. There is more to it than just recovery, though. What's also happening is we are now beginning to enter the summer high season in most of the Northern Hemisphere, other than ski destinations, which means that these ADRs or the booked rates would naturally increase slightly as we get closer, because more and more bookings that are happening now are happening for the summer high season. So although it seems to be trending, it ideally would be a lot higher if not for COVID. If you go to the next slide, this is the same chart showing you booked rates, but we have also broken it down by length of stay. The reason we found this interesting to look at is one of the reasons we think that ADRs could have gone down, or the booked rates, nightly booked rates could have gone down, is just because more longer bookings were happening, and longer bookings tend to have a long-term discount. So we also wanted to say, are the prices going down even for shorter bookings or not? And the second thing that these show in some ways are what kind of length of stay discounts might be prevalent in the market. In the urban North American markets, for example, it seems like in February, the rates that were getting booked were indicating about a 30% long-term discount for monthly stays, for example. One of the recommendations we gave out very early was, given how low the occupancy was going to be, that it might be useful to really double down on your length of stay discounts to get some of those longer bookings. So instead of booking 10 days in a month at your normal rates, it might be okay to book all 30 days at a 50% discount, which is still giving you more revenue than just having 10 days booked. And it seems like that has been showing in the market. Like in March and April, the monthly discounts and the weekly discounts seem to have touched close to 50%, and those seem to be coming back up. This chart, the bottom chart, also shows something very strange from what we are seeing. Unlike the North American segments, where the nightly rates haven't changed too much, what we are seeing in Europe is people seem to have kept their monthly rates steady and the weekly rates steady, but have really gone ahead and given deeper discounts for short stays as well, and that might be an indication of the fact that in urban European markets, the recovery doesn't seem to be strong enough, and we might be looking at a longer, much more protracted period where demand is suppressed. So a lot more folks have gone ahead and said, okay, this is sort of here to stay. We are not. We also need to lower our nightly rates and not just try and get longer stays, but also get more discounted short stays as well. Cool. So this chart is coming up. This is again showing the length of stay. So for bookings made in each month, what kind of length of stay mix did we observe? And you'll see pretty much in every chart in February, in all 4 segments, the 0 to 3, as 1 to 3 night long and 4 to 7 night long stays used to be more than half the bookings. And as COVID's impact really started coming in March and April, that percentage kept reducing. So pretty much in every graph, you'll see the red and the blue segments increasing at the peak of COVID. And now we are seeing in all 4 segments that it is coming back up slowly to the levels it was back in February. So this is important because even though in Europe, in urban markets, we are seeing recovery not happening as much in terms of volume, it still seems to be happening in terms of the mix. So we are coming back to more people booking stays farther out. Sorry, not farther out, but more people booking shorter stays as well, which is pretty good news in some ways. Next slide is looking at the exact same thing, but now it is going to look at it from a lead time perspective. So in this one, we have at the bottom, we have same day bookings, which is in yellow, and then blue is bookings made within the last week. And then at the top, we have purple, which is bookings that are made more than 6 months out. And you will see that at a first glance, it seems like this chart is very similar in that the lead time distribution is coming back to what it used to be in February, which is essentially saying people are coming back to booking farther out stays. So you'll see that at the peak of COVID, same night stays had really shot up. That yellow had gone up and it's slowly coming down. Same week stays had also gone up and they're slowly coming down. But one of the important things to note here is back in February, a lot of people seem to be booking stays that were more than 6 months out. Not a lot, but still there was something there. Now in June, we are almost not seeing much of it. So it seems like the segment that has really grown compared to February has been these stays that are 15 to 60 days out, which might also be indicative of seasons in some ways, because for the peak July, August season in many of the locations around the world, uh, destination locations, a lot of urban locations actually see a summer low. But for a lot of destination rentals, we are seeing this trend might just be indicative that, okay, people are booking a lot more bookings for the coming summer. So that's uh, in some ways, it's really good news in that it's especially for destination rentals where the volume is so far up. It's saying that this summer season is going to or looking like it will be a fairly good one, because even now people are booking a ton of stays for that period, which is up 15 days to 2 months away. It's also something that we want to highlight for other locations in terms of price, and we'll come to recommendations on what to do for pricing strategy. One of the things we have been saying throughout this COVID period is, given that the lead times have been so short, and given that we don't know how the rebound would be for each market, our recommendation had been to discount while your demand is low, to discount stays for the next 2 months, but not do it beyond that, because we just don't know if there is a strong recovery. You don't want to be in a situation where you sold out your peak season rates for too low, and then now all of that demand is back and you could have sold it for much higher. Cool. So this one is slightly different. So this data is not coming from our market, from our reservations data for our users, but this data is coming more from our market dashboards, where we show for any location that you pick what kind of occupancy trends are we seeing. So the top chart is, the blue line shows you the occupancy trends for the future. The green line in that chart on the top chart shows what new bookings are coming in the last week. And then the red line shows what dates are people canceling for in the last week. And then the bottom chart shows the percentiles of price, like the median price, the top 25th percentile price, and the bottom 25 percentile price. The reason we pulled out these two is to highlight just how difficult it is going to be to predict events and increase or decrease prices for it, because the signals in the market, which are normally pretty reliable, are fairly noisy right now. And it's very, the two charts are essentially trying to highlight Chicago and Boston, which are both hosting their marathons this fall. So Chicago Marathon is usually second week of October. You'll see that the occupancy is peaking at that time. So right now it's showing at 20% occupancy, whereas other weeks around it are around 5%. And you'll also see everybody has sort of raised their prices for the marathon. The exact same trends also show up for Boston, where occupancy is up for that weekend. It's looking at 15%. You are seeing some tiny sliver of cancellations happening there, but not enough. And then at the bottom, everybody has raised prices for that weekend. And in this case, Boston Marathon has already been canceled. That's been announced. Just that in terms of prices, the hosts and the managers have not reacted and have not reduced their rates. And in terms of occupancy, a lot of the people who have booked these days have not canceled it yet. And that might be for two reasons. One, once the marathon is canceled, they might not have gotten to canceling it. But also some guests might have hopes of getting a full refund if different OTAs policies allow for something like that, given the circumstances. So with that said, occupancy, the market occupancy still shows you a peak. The prices in the neighborhood still show you a peak. So it just becomes fairly difficult to figure out, okay, is this a true high demand event or not? Knowing what we know for Boston, we know that this is not going to be a high demand weekend, but just by looking at this data without any context, you would think that, yeah, there is something big happening there. Cool. With all of this data behind us in some ways, wanted to dive into some of the recommendations we had been giving previously in terms of length of stay discounts, what to do with prices, flexible cancellation policies, minimum stays, and events and holidays. So for length of stay, one of the things we had recommended back in March and April was, given that the market occupancy in so many areas is so low, it might make sense to go ahead and ramp up those length of stay discounts while keeping in mind that you have operational costs and you don't want to fall below a certain level and all those things. So this has to be a fairly personalized approach. So what we're saying there, our general approach at that time was, there are two things that go into figuring out what your length of stay discounts should look like. One is, if your monthly occupancy is looking at, for example, 70%, then in some ways it doesn't make sense to give a discount, a length of stay, a monthly discount of more than 30%, because effectively you're saying, I can anyways, if that 70% continues, that I can get 70% of the days booked at the normal rate, why should I give a bigger discount and get lower revenue for the month? So it makes sense to have a discount somewhere close to or below 30%. The only reason to go above 30% would be, in this case, in this example, so this is each person, each manager will have to think about this for themselves. But in this example, we are saying, if you go with slightly above 30%, the only two reasons would be, one, by getting a monthly booking, you're sort of reducing the risk in saying, hey, you're now assured that you'll get that money in some ways, unless the booking cancels. And then the second part there is, there are fewer operational headaches with longer stays. So it might still make sense to go slightly above 30%. But then this is made up, the example I gave of if your occupancy is running at 70%, given where we are, it's constantly changing, and Oliver will show some of the data that can help in that respect. So right now it might be looking like everything is booking 50%, but maybe in 2 weeks time, as recovery happens, it becomes 60%, 70%. So it's important to keep an eye on those things and adjust accordingly. The other thing here is, and this is not just for recovery or for COVID, a lot of our customers use these strategies where they try to reduce the number of gaps in their bookings using some price settings as well. So we have a setting called adjacent day prices. Oliver can go a little bit more into that, but it's not a setting that's on by default. So all of you might not see it, but if you do want to use it, let us know and we can enable it for you. What it does is, just like in orphan night bookings, orphan night settings apply when there is a gap. Adjacent day settings don't need a gap. All they need is a booking, and then these settings can be used to increase or decrease prices right before or after a booking. There are two ways people use this. One is, if there is a booking, the next time we sync prices, we can drop the rates for the day right after and right below, or 2 days right after and right below, in the hopes that other people book those days. They are incentivized to book those days in some ways because the rates are cheaper, and you'll show up higher on the search when somebody tries to book those, is looking for a place for those 2 days. And if somebody books those days, then you don't have a gap in your calendar. Unlike if somebody booked 2 days after a stay started, a stay was ending, then you have a 2-night gap, which might be harder to fill. So you're kind of saying, hey, let me try and get those adjacent days booked so that there are no days. What that also means is now you'll have longer chunks potentially to take a longer stay. The other way people use adjacent day settings is to actually increase the rates for the nights right next to a booking, to sort of say, okay, I want to reduce the amount of same-day check-in checkouts. It's not going to guarantee you that there won't be same-day check-in checkouts, because we update rates every 24 hours. So 2 people might book right next to each other between 2 of our updates. But if that doesn't happen, at least the next time you get a same-day check-in, it will be at a higher rate. The next topic is prices. Back to in the last 3 months, our recommendation generally has been, if you are the discount the prices for the next 2 months, but not much farther out. That for most markets, we are still saying that is something to stick to, because in each market, we don't know how soon things will start to recover. For example, like in North American destination markets, everybody is still surprised at how strong the recovery has been. But if you know your market and if you know that demand is going to stay suppressed for quite a long time, that might be a reason to then go in and make broader changes farther out. So for example, these might be markets which are fly to markets where it's an island market where it's very hard to drive. Most of the demand that we are seeing these days is from drive to markets. The other might be a city that relies a lot on business travel. A lot of travel happening right now is still on the leisure side of things. Most business travel, most business conferences are still have been canceled or not happening this year. So if you are in a market that relies heavily on business travel, that might be a reason to go and say, okay, it looks like the market is going to stay like this for quite a while, and I need to make broader changes. Something that might help on both of those is our portfolio and listing occupancy based rules. Most of our customers use listing occupancy based rules. What they do is they adjust prices based on how each listing is doing. If you are a larger manager with a lot of listings, then you can also use portfolio occupancy rules, where you can say, if I have a group of listings, on each day, based on how occupied that group is, how far out I want to adjust prices up or down. So you're able to then react to surges and dips a lot better. Cancellation policies, we are still trying to look at data, and we are going to show some of that data in our upcoming update to the reports. But one of the things that we've generally seen is right now it makes sense to have more flexible cancellation policies, and that the guests might not know for sure if they'll be able to travel, and if that's the case, then they might want to book places that have a better cancellation policy. Minimum stays, again, for minimum stays, we generally, COVID or no COVID, we generally say it's good to have cascading minimum stays, where start out a little higher, more than 6 months out, or look at your booking window and start out a little higher on far out, and then slowly reduce it to normal levels. And we'll see some data around this as well in our 2.0 report market dashboards. But generally, that's a good practice in trying to get your calendar to be filled up with longer bookings far out, and then getting the normal bookings in the middle where your main booking window comes in, and then getting short bookings to fill up everything else last minute. And for events and holidays, we already track all the data and increase or decrease rates based on that. But like we mentioned, some of the market signals are very mixed for canceled events. So it might make sense to keep track of events and holidays. Holidays don't get canceled, but keep track of events to see what dates are getting and what events might have gotten canceled where the demand is still showing up high. And if that's the case, then make adjustments for those using overrides or something like that. Cool. So this was fairly broad. What I want to do next is just hand it over to Oliver, who will go into what you can do about looking at data and reacting to it in your own markets.
Perfect. Thank you so much, Anurag. So yeah, now we will that was kind of the generic data, and a couple questions that came up during that. When we say North American data, what countries are we actually looking at? Is that US, Canada, and Mexico?
Yes.
Or just the US?
It's actually all North America.
North
so
America.
It includes Central America as well.
Okay,
yeah.
got it.
Yeah, just based on where our customers are more, it would be US, Canada, and Mexico.
Perfect. And then follow up to that, for European data, are we still including the UK in that data?
Yes.
Okay.
Yeah, so our geography, it wasn't European Union, it was Europe. So yeah.
Perfect. That is exactly what I thought here, just clarifying here. Awesome. Perfect. So now we'll hop into analyzing your market's recovery. So I'll be talking about how to use our market dashboards tool to actually get this data for your local market. So if you're wondering, hey, how do I get UK data? How do I get Canada's data? How do I get Spain's data? These tools let you kind of specify whichever market you want to look at, so you can see a lot of these trends that we're talking about locally here. And I'm sure Anurag will be hopping in to clarify a few things as we go. But the main trends that we're looking at here, similar to what we were just talking about with those kind of actionable items that you can take. First one, ADR, so average daily rate, how much you're charging, lead time, length of stay, and then looking at those high occupancy dates. So everything that we just gave those broad recommendations for, here's how to find that data for your specific market. So most of this will rely on these graphs that we see here that come from our market dashboard. So for those of you who aren't familiar with market dashboards yet, this is a new tool that came out a few months ago, but up here in the top right corner, market dashboards, if you click on that, that will take you to our market dashboards page where you can order reports for your specific area. And when you're ordering reports, you essentially type in an address, a radius around that address, and we analyze all properties within that radius here. So when looking at ADR, the two graphs that are kind of going to be most helpful here are going to be future prices and new bookings. So future prices, these get, of course, updated on a daily basis, and future prices is going to tell you for your specific market, what is the median, bottom 25%, and top 25% of prices for all future dates here. On the right-hand side, this is a feature that a lot of people overlook, but it says median booked price. If you click on that, you'll see a yellow line appear over your data. That will show you the median price that was actually booked. So in this graph here, the median price, median book price ends up being pretty close to that 50th percentile here. However, that's not always the case. So since we were seeing a lot of dates with low demand, we have been seeing that median price stray a little closer to that 25th percentile in some markets around the world. And then it's good to note that for all of these graphs, you can also filter by bedroom type. Here we have all selected, but if you're a 1-bedroom, a 4-bedroom, you can always filter by type there to see how prices relate to your properties. So first, yeah.
Quick input, Oliver. In this one, it's very odd that for Christmas and New Year, the median booked price is showing up below the blue line, whereas it's about at the blue line everywhere else. That doesn't mean that Christmas and New Year are going to be low demand. All that means is people booking right now for those dates are looking for lower rates. Because those dates usually tend to be in such high demand, eventually, as those dates get closer, that will creep up.
Definitely. Yeah, no, good clarification here. So with this, super helpful for seeing how people are pricing those major holidays. Be aware that this is kind of aggregate average data. So a lot of people who aren't pricing dynamically, their rates are included in this. So that might kind of sway the price either direction here. But this is also great for seeing how prices change last minute. So often you can see a last minute decrease here, how prices change by day of the week. So you can typically see your weekend spikes happen, and then seasonality. So this particular graph is for Whistler. So you can see that after the new year, once the ski season really gets into full swing, we see higher rates up here purely due to seasonality. So if you haven't looked at your minimum base and maximum prices in a while, I would definitely recommend looking at your review prices calendar, seeing where your rates are generally falling, and then potentially adjusting those based off of this data here. So one thing that we don't currently show are historic prices. It would be great to see, where were average prices 2 months ago, 3 months ago, so you can see how that changed during COVID. But one way to kind of supplement that is going to be this new bookings chart right here. So with new bookings, this basically shows the volume of new bookings that occurred each week for the past, I believe it's 3 months or so. So as kind of we see demand greatly increase in this market, more and more people are booking, that's typically a sign that prices should be going up with this higher demand. So not indicative that prices were lower here and are higher here, but generally as demand increases, rates tend to follow as well. And with that increase in demand, we do have those occupancy-based adjustment tools. So especially that coronavirus profile that I know a lot of you are using. As your portfolio starts to see a lot more bookings come in, your occupancy will increase and your prices will kind of automatically go up. So I know Anurag was talking a lot about how different markets are currently reacting differently. So let's say those European urban markets where it looks like rates are lower and might be lower for a while now. That would be a great time to adjust your minimum and base prices. So if it seems like a more permanent change where prices, you think they're going to be lower for a longer time, definitely adjust that base and that minimum. Whereas if it seems like something temporary, so for example, let's say you're in Hawaii and you're currently in lockdown, that would be a better case for doing date-specific overrides. So going into your calendar, let's open up the multi-calendar is a great place to do this. But basically going in, selecting multiple dates, let's say the next 2 months, and setting a lower price just for the next 2 months, since things will likely be pretty drastically different once lockdown is lifted here. One thing to mention, some of our users have been using custom seasonal profiles, which is a tool that lets you change the minimum, base, and max price for different seasons. That's something we wouldn't typically recommend for something like COVID, since a lot of the changes in price, these aren't things that are going to be happening year over year. That's kind of very specific to 2020, and these trends kind of won't be repeating in 2021, hopefully. So no reason to drop your, let's say, August and September rates for all future years. That's better done through overrides here. Anything to add here, Anurag?
No, I think you went through pretty well.
Okay.
Covered everything. I'm also looking at questions right now.
Okay, perfect. All right, so that is ADR. Keep those questions coming in. But now looking at lead time. So again, all of these graphs are displayed in those market dashboards. For lead time, the ones I typically use are going to be this lead time graph right here and future occupancy, bookings, and cancellations. So with lead time, this shows you for all bookings made each week, what was the distribution of how far out people are booking. So we can see back in April, a big chunk, so almost, that's probably 70-75% of all bookings were booked 2 days in advance or fewer. So very last minute, no one was really booking far out. So once we hit that, week in advance point, so that yellow line, we were about 80% of all bookings. So only 20% were booked, let's say 1 week plus into the future. Now we see for this market that spread changing to be a lot more of those far out bookings. So maybe people are planning those vacations. And with that, we have been seeing a lot of kind of pent up summer demand where people were uncertain of what vacationing would look like in the summer. So we're seeing a lot more of those bookings coming in, and where typically we would see those get booked, let's say 60 to 180 days in advance or 180 to 360. We're seeing a lot more of those coming in 30 to 60 days in advance and even 14 to 30 in a lot of markets. So you can check these trends on your own here. And that can be a great indicator of what to do with your dynamic minimum stays. So back here, when everyone was booking very last minute, your calendar was pretty empty. You didn't necessarily know what bookings were going to come in. Whereas now that things are shifting to more further out bookings, that can kind of inform your minimum stay policy. And to set minimum stays, I know that's a question that came up a few times. To do it on the group and account level, simply head to this customizations page. If you click edit up here, you'll be able to set your minimum stay updates, and that'll open up these cascading settings here. But generally, the kind of as people start booking further and further out, it can be a good idea to, in your kind of cascading settings for those far out dates, set higher minimum stays. So now we're seeing people, let's say 30 days out, booking their summer vacations. So you might want to set a far out minimum stay to say, hey, if a booking's coming more than 30 days in advance, instead of using my standard minimum stay setting that might be 2 nights here, let's require them to book 5 nights, for example, to try to get those vacations. And then as the date comes closer, we gradually relax those settings here. For this future occupancy, bookings, and cancellations, one thing I wanted to note is that looking at this new cancellations graph, so this red bar, can be helpful to see, hey, these higher demand dates here that I'm seeing in the calendar, are people still booking those dates or are people canceling their reservations? So typically not too many cancellations are going to come up in a given week, but this can be semi-indicative of, hey, this event here, has that been canceled and people are canceling their stays? Or here where we see a small spike in demand, we see more people booking. Maybe that's an event that was rescheduled here, so something to look into. Maybe set a manual override for each of these here. And then additionally, with that summer high season coming up, manual overrides for minimum stays are definitely helpful. So you can set these on the group and account level as well, using this update overrides button. So this can be great to say, hey, from June, or maybe let's say from July 1st through, let's say, the end of September, this is my summer high season. So let's set a manual minimum stay of 4 nights here, for example, just to get a slightly higher minimum stay for that high season here. So just showing you that is an option there. Perfect. Next trend to talk. Yeah.
Quick note there.
Yes.
Yeah. Once you have that override in place, all the other rules for last minute minimums don't reduce the minimum stay. But if there is an orphan gap created, then we will account for that and say, okay, if there's a 3-night gap and your summer minimum stay is set to 4 nights, then we'll make it a 3-night stay. What a lot of customers do right now is, as summer gets closer, they would go in and say, okay, July is less than a month away or less than 60 days away. Instead of 4, manually reduce it to 3 nights or 2 nights. Because now it becomes last minute. That's a feedback that we have gotten quite a lot of times. So we are planning on working on some enhanced minimum stay settings to be able to make that process a lot more streamlined. So yeah,
definitely.
And if I can add a second point, sorry.
Yeah, of course. Yeah, no, that's good. That's great.
Right. So the minimum stay by lead time that you were talking about the cascading minimum stays, right now our reports don't show it, but the version 2 of our reports, which we are rolling out next week, they will contain information about lead time by length of stay, or length of stay by lead time. So towards the end of these slides, we'll show some of those charts and what a version 2 is looking like right now, so that it's going to be a lot more actionable in terms of setting these policies and customizations.
Definitely, and we'll show you a few of these graphs at the end of the webinar here, but that's coming out next week, and a lot more kind of actionable data here to go over as well. And we have some questions coming in for, hey, can we see some graphs for X specific place? Again, you can order graphs for your specific location, your exact street address, directly from this market dashboards tab. So you have 5 free credits. Go nuts, get that data.
Right. So and those 5 free credits get you like these reports update every day, and at least right now we are going to update all of these reports till July 31st. July 31st. So yeah, there are 5 free reports in each account. You can order and get this data that will refresh every day till July 31st.
Totally. Perfect. Alrighty, moving on to length of stay here. So similar graph to lead time. Now we have this lead time graph that we were just looking at the bottom, and length of stay at the top. So here we're essentially analyzing for all the bookings that came in, what was the length of stay that they were booked for? And you can see again how that changes over time here. And with length of stay, I mean, in this market, we're seeing that back in April, very few short stays going on. So 1 and 2 day bookings, those only made up about 25% of all bookings here. Whereas people were really looking, let's say almost 60% of the market was midterm at 1 week plus bookings. So we can see as we've kind of started to enter recovery, those shorter stays are rebounding, but you can see what this looks like for your specific market. But based off of the breakdown of these short versus long stays, this can be a great indicator of what to do with your actual length of stay strategy. So I know a lot of our users switched over to midterm bookings back here and adjusted all of their customizations to only allow bookings that were, let's say, a week plus. Now that strategy might be a little less effective, since 1 week plus bookings for this market only make up about 10% of all bookings. So you really want to be checking in since these trends are changing. Your customizations can change pretty often here. So with this, dynamic minimum stays, definitely the customization to look for. And also, as Anurag was mentioning earlier, that adjacent day discount can be helpful here for, let's say you're taking longer stays, but that can just encourage people to book either an extra day, book a day earlier, book a day later, to discount those days and get fewer gaps in your calendar here. And with this, if let's say you're in a market that is still seeing high bookings for those longer length of stays, so let's say most bookings are still coming in at a week plus or so, those length of stay discounts are particularly helpful. So the next set of market dashboards will have more data on what discounts are coming in your area and what other people are doing with those discounts. But for now, spot checking, looking at what others are doing around you, that's pretty much the way to go with seeing how you should discount your properties here. Perfect. And then last one here is going to be looking at these high demand dates. So as we were saying earlier, lots of events that were scheduled that are getting canceled, lots of events that are getting rescheduled, lots of holidays in the future where that might still be in limbo as to what's happening with bookings. This future occupancy bookings and cancellations, great for seeing what dates are booked into the future and what bookings look like. And then they can also help you analyze how people have been changing their price. So here, I mean, Christmas and New Year's, definitely a big spike going on in this market in terms of bookings, not too many cancellations going on, and we see that prices have gone up drastically. So if, let's say you had decreased your rates, this would be a good indicator to maybe set an override to increase your rates since everyone's rates are going up. And then additionally, just looking at wherever we're seeing new bookings, sometimes when new events get announced, they'll be extremely drastic, and then using your date-specific overrides to override those with higher prices or higher minimums, since with booking volumes just being slower than they typically are, our system might take a little longer to catch up. So it's good to have those minimums in place to really protect your rates there. Perfect. Next slide here, this is generally just a cheat sheet we came up with. So for each of these trends, we'll be sending this out in the kind of follow-up email. So for each of these trends, telling you which market dashboards you should really be looking at here, and then also which tools are kind of associated with each of these market dashboards. So, you know, looking at ADR, changing your minimum base and max price versus looking at date-specific overrides, and things like that here. Sorry, I think I might have an audio problem going on. Give me just 1 second. Okay, that looks to be better now here. Give me 1 sec, sorry about this. All right, Anurag, anything to add about looking at your specific data with these dashboards and adjusting rates here?
Not really. I think yeah, you've covered in a fair amount of detail. One thing that I want to point out here is for ADRs, we have gotten questions from some customers who were adjusting rates for the next 2 months, for example, by lowering their seasonal base prices for the next 2-3 months. And I wanted to clarify that those seasonal base prices apply for all years. So what that does is if you reduce your August base price using the seasonal profile, it's also reducing it for August 2021. From that perspective, it's better to not use the seasonal profiles, but use date level overrides which are year specific. So you can really target August of this year instead of August every year, which is what seasonal profiles would do.
Perfect. And sorry, I'm having some technical difficulties. Can you still see the screen here and hear me okay?
Yep.
Alrighty, perfect. Great. All right, so last thing I wanted to cover on my end here would be settings to check post-COVID. So as we were saying earlier, a lot of you have definitely made some big adjustments while COVID was going on, maybe putting in different date-specific overrides to really drop rates, dropping your minimum and your base rates, putting more aggressive last-minute discounts. So I just wanted to go over a few things to look for here and where you can kind of quickly find these. So date-specific overrides, one of our recommendations early on was to not necessarily drop your minimum and base price, but to simply drop the price for, let's say, the next 2 months if you weren't using our occupancy-based adjustment. So to find where you might have put overrides into your calendar, since these are easy to miss, those can kind of linger for months and months sometimes. On the customizations page here, so if you go under dynamic pricing, customizations, we have 3 tiers of overrides. So we have the listing level, the group level, and the account level. So overrides can be hidden in 3 different places. If you click this all account level date specific overrides, we'll basically load a list of every override that's set on that account level. Takes a second to load here, especially when I'm streaming. But same goes for those group overrides. And if you scroll down, same goes for those listing level overrides. So instead of opening up each listing individually, seeing, hey, do I have anything for each of my 20 listings? You can just click this button and that'll load a list of every override for every listing here. Additionally, our new multi-calendar, good place to spot check, since here you see all of your listings on one page and our overrides show up as these black bars. So if you're ever reviewing your rates and you see something, you're like, hey, I don't remember setting this, definitely take a peek, consider deleting those, and just a good visual of what dates have overrides here. Perfect. Next thing, some of those aggressive last minute discounts and minimum stay settings that you might have set. The customizations page, again, great resource for that, where if they're on the group level, very quick to just scan. Last minute prices, this is what I have set. And then occupancy profiles, I have it as default here. So great place to look at those. Of course, you can see all of your default discounts going into play. Additionally, if you do see something that you say, hey, I have no idea why I have a 70% last minute discount going into play, under accounts here, we have our logs page, where for each of your listings, you can basically see when these different overrides were adjusted here. So if we look at listing name, you'll basically see a list of every time any change was done to any listing here. So you can kind of track when those were put into place, by what IP address, and so on here. So a good resource that is often overlooked there. Then last thing to mention, lower base and minimum prices. So if you want to see how your base and minimum price has kind of evolved over time during the crisis, under review prices here, we have our base price history tab. So this is going to be on the left-hand side under where you typically set your base rate. Sorry, this wasn't preloaded. Base price history right here. So this is a demo listing, so this might be popping up with some pretty sporadic numbers. But here you'll be able to see, hey, for all past dates, this is where my base was, this is where my min was, and this is where my max was. So if you're wondering how much did I drop my base by during the pandemic, did I even drop my minimum price? Great resource here to see, hey, you know, where were my prices set previously? So good place for your reference there. Perfect. That's all on my end, and now I'll have Anurag talk through our new market dashboards coming out next week.
All right, so we have officially 6 more minutes, but what I'll do is I'll cover the dashboards in less than 6 minutes, and then there are some interesting questions that I do want to go through. So we'll go a little over 1 hour for that. So just quick overview of what's coming up next week in the market dashboards. One of the things that we got feedback on was we are looking at length of stay and we are looking at lead time, but those two are often interconnected and not enough to see them separately. So what we have tried to do is 2 things. On the top chart, for all the bookings made in the last 30 days, it's going to show you in the area that you selected for future dates, what days have gotten what length of stays. So for example, here, it seems like these 2 days or fewer bookings are often happening on weekends, which is pretty natural. Also here, it looks like this is probably Myrtle Beach, one of the markets we are looking at, where most of the bookings seem to be happening that are 3 to 7 night long. So you can kind of also look at different seasons, different days of week, different events, or sometimes it's very useful to spot events and see what length of stays are people booking for a big holiday or for an event, so that you can decide what your minimum length of stay should be. So if everybody is booking 7-night stays for a big holiday, maybe you should have 7-night minimums, because if you have a 4-night minimum and somebody books a 4-night stay, then you're potentially foregoing revenue for the dates around it. The bottom charts are more useful for setting cascading minimum stay policies. On the left, it's showing you for each lead time. So each bar, each column here is lead time, and it's showing you the total length is showing you the volume of bookings coming in each lead time. So it seems like a lot of last minute bookings are happening here. But on the right, it also shows you what percentage of bookings happening in a certain lead time are in a particular length of stay category. So this is super important. It kind of shows that as you get closer and closer to the day of departure, not departure, day of stay, more and more bookings are made that are shorter in length, which kind of goes with what we have been saying. Try to set higher minimum stays to get longer bookings far out. Last minute, more bookings tend to be shorter, so try to get those. And this can help you look at your own markets data and figure out what those settings should look like. So again, this is coming out next week. If you go to the next page, Oliver. The other things that we are adding to those reports are amenities, like just trying to show what amenities are common in your area. And also, this one is supply. So the blue line, the blue bars are supply, and the red bars are demand. So blue one is showing what's common in the listings, and the red one is showing what's common in the bookings. So if you look at the very bottom, it looks like heating is available in 45% of the listings. I don't know which area this is in, but more than 50% of the bookings happen on listings that have heating. So it's good to know what people have and what amenities other people have, and maybe you have some of these amenities and you're not advertising it correctly or putting it out on the listing. There's still some caution to be had here, because just because a listing has heating doesn't mean that that's what's causing the bookings to be more on those. It could just be that listings that have heating are also higher quality or upscale, which is why there are more bookings happening on those. But this is directionally sort of helpful to find out what might be happening. So if you look at all of these, it paints a picture to you of like, okay, what are guests looking for? The next one is, so we in PriceLabs, one of the things we've done from the very beginning is focus a lot on the nightly rates and the minimum stays, but not so much on the other fees that go on top of your reservations. So these could be cleaning fees, this could be extra guest fees. And really, like we got these questions a lot on, hey, I want to know what kind of cleaning fees do people charge, or I want to know what kind of extra person fee people charge. Or during the current times, it's also important to know what kind of cancellation policies do other people have. So what we have added in this version 2, that's again, if you see now, you won't see it, but next week you should, late next week, is what percentage of listings have what cancellation policy. That's the leftmost chart. The middle chart is showing cleaning fee on the x-axis. So it looks like a good 15% of the listings, more than 15% of the listings do not charge any cleaning fee. And then about 12% of the listings have a cleaning fee that's more than $56. And then there is a fairly bell-shaped curve in the middle. On the rightmost one, this one is has been the most surprising to us in some ways, where it looks like more than 40% of the listings do not charge an extra guest fee. And it also looks like there are a bunch of listings do charge a fairly significant $20 more and more in extra guest fee. What that does is it allows you to segment your market a little bit. So if you're in a market where you mostly cater to larger families, but right now with lower demand, you also want to be able to cater to smaller groups, for example, without reducing your nightly rates. One of the things you can do is you can actually reduce your nightly rates, but bump up or start adding an extra guest fee, so that when larger families book, you still get the same revenue or more. But when smaller families book or when smaller groups book, your listing is a little more enticing or economically feasible for them. So it's generally good to be aware of, like, what are other people in my area charging. And again, you can filter these by number of bedrooms so that you can see exactly for 2 bedrooms what are people doing versus for 4 bedrooms what are people doing. And then the next chart is this is the same chart that we have been seeing. Oliver has been showing this, but one of the things we are adding is the possibility to go back in time. So this will not unfortunately not go back all the way. It can only go back up till April, but we are going to keep that. So as time goes by, we will keep showing April 2020 and onwards, so that over time you can come back and see what was happening 3 months back, 4 months back, and stuff like that. Yeah, that's more or less on those reports. Again, if you have any questions that we did not address here, we are going to go into the Q&A. But if there are questions that we did not address, or if you have any other questions that come up as you explore some of these things, just email us. We're super quick in replying to support questions.
Perfect. And with that, any interesting questions you wanted to tackle first here, Anurag?
I'm just beginning to look at it again.
Okay, perfect. One that's come up a few times that we always address: where is the data coming from? Just Airbnb or other OTAs?
Right. So right now it's coming from just Airbnb. We are close to the point where we can start adding Verbo to it as well. But right now it's just Airbnb. That doesn't mean that the bookings are only what happens on Airbnb, because the way we are doing this is by looking at each listing very frequently, every day or every couple of days, to figure out what day that was available is now not available. Also then filter out, there are times when days become unavailable, but they look like a blocked date. So trying to figure out what's booked versus what blocked. So regardless of whether it happened on Verbo or booking.com or your direct booking website, if it looks like a booking because the dates are not available on Airbnb, we'll consider that as a booking.
Perfect. And then next question, since we are talking so heavily about market dashboards, is there a way to change or edit the dashboards after you've created them?
That's also something that we are working on. So you won't be able to change the address, but you will be able to change the radius, so that if you, in the beginning of creating the reports, you chose a radius of, say, 15 kilometers, and that just becomes a very large area. We always look at the 1,000 closest listings, but you might want to say, hey, I don't want to, even if there are listings that are outside, I just want to focus on immediate 2 kilometers. You will be able to edit the radius.
Perfect, yeah. And with that, if you do have any kind of specific questions about deleting reports for your account or changing things, shoot us an email, support@pricelabs.co right here. We'll get back to you quick here.
Correct. And so a few more questions on the reports. One has come up that says, are the occupancy rates counting block dates or only book dates? So this is, we look at each set of unavailable dates and try to figure out whether it's booked or blocked. A lot of times the date is blocked on Airbnb because the booking came on Verbo or the booking came somewhere else. So we don't necessarily want to say just because it's blocked that it's not booked. It might be booked on some other OTA. But if it is a block that our systems have now come to realize that, okay, this looks like this is not really a booking for whatever reason, then we'll take that out. So there is some filtering that we do to figure out what's booked and what's blocked. UK, there's a question about UK, and we are seeing this happen. For UK, the supply data is still very relevant, but the demand data of how many bookings are coming in is a bit spotty, because in UK, Airbnb has blocked all calendars for the next till July 4th right now, and they've been doing it on an ongoing basis. Sort of, I think they started back in April, where pretty much for the next 2-3 weeks they would block the calendars, and then as that date approached, they would block it again. So there, in UK, the reports the demand data is not looking as clean in some ways, but the rest of it should be working well. There are some questions about specific locations and reports showing certain numbers, and I think we can, yeah. So when you order a report, when you select the area, it will show you how many listings there are. Once you generate the report, it will take about 2 to 5 minutes for the report to actually generate for you to be able to look at that data. And so if you're not seeing that data even after 5 minutes, shoot us an email and we'll look into that. Sorry, I'm just running through the questions here.
No, I like it. It's great, rapid fire.
There's a question where it says, if there is 0% occupancy for a future date, what do we show as the median booked price? If it's truly 0%, then the median booked price will show up as 0. What might be happening is it's not 0%, but 0.2% or 0.3%, where 1 or 2 listings have been booked, in which case it will show something other than a 0 booked price. There's a question about destination markets where travel restrictions are still in place. And the example here is Honolulu. I think one of the things that could be, the market reports would be a place to start. And then if you don't find enough data there, just shoot us an email and we'll try to see if we find something enough in our reservation data as well. Then there is, right, so there is a question about reducing rates in general and while keeping up the quality and everything else. So this is a fairly important question. Like, do you, like, every host and every property manager has to sort of make that decision on their own of how, if no bookings are coming up, how low are they okay with while still running a profitable operation. So yeah, this is a fairly sort of personal decision in some ways. We can provide a lot of data around, like, are other people getting booked? Are other people setting rates that are much lower, to help you figure out, okay, will it even be beneficial to go lower or not? But how low to go is, we generally, like, it's a very personal decision, and every manager or every host should make that call for themselves in some ways.
Perfect. I see a question about someone having issues generating a report. When you get to that final step, make sure you name the dashboard. That's something that is a common issue. So make sure you type in a name under dashboard name. If that doesn't work, shoot us an email, support@pricelabs.co, and we'll take a look at what's going on for your account.
Right. One of the other, I'm looking at Anita's question about, like, going too low on the prices or not. One of the other things you could try is, a lot of our customers have sort of tried to say, okay, there is not enough short-term rental demand, and short-term rentals are sort of operationally expensive in some ways, in that you have to be, you can't really not do cleaning, especially right now. And if you have a ton of 2-night bookings that are very cheap and don't have enough cleaning fees, then it might not be a profitable business to run. One of the things a lot of folks have done is, not a lot, some folks have done is just also start marketing to mid-term rentals or longer-term rentals. So we've seen plenty of folks who are advertising now on places that are more catered for monthly stays or 3-month-long stays, and see if you can get longer stays that are going to be cheap, but then operationally they're not as expensive, because once somebody is in your place, it's sort of their home to maintain for if they are there for a longer period, especially. So see if something like that might help. All right. Owner blocks. So again, in the reports, there's a question about what to do for owner blocks. And truly, there is nothing, if owner blocks look like bookings, which in a lot of cases they do, there is not much that can be done in these reports, especially. In the reservation data that we were showing, owner blocks are not there. They're true reservations where the fee was more than, there was a proper nightly fee applied. But from the data that we get from Airbnb, owner blocks will look like reservations. And in some ways, we are okay with that. If we are saying, even though it's an owner booking that doesn't give you anything, it's indicative of demand. Like somebody is coming and staying in your neighborhood, and that means there is more demand for rentals, and there is one lesser supply. Even though it was an owner block, it does take away supply. So from that perspective, for these reports, owner blocks are considered as bookings. So there's a question about whether average nightly rate booked is the same as ADR. It is not. Average nightly rate booked is looking at reservations and seeing what was the average nightly rate for those reservations, whichever reservations are taken into account. ADR is more of the average nightly rate in the market, which is advertised. So it's not looking at just bookings, but it's also looking at what's the supply, like what is the average daily rate or average nightly rate of the supply looking like. Cool. And then there is a question that's from Olivier about using PriceLabs. I think that question is super specific. We'll address that in support.
Yep. Perfect.
All right. And yeah, all the questions that came in that we didn't address here, we will address those on support. We'll either directly reach out to you, or if you reach out to us before that, we'll reply to that.
Mm-hmm. Perfect. Great. No, great question. Great rapid fire responses here. I know that's appreciated since we're already 12 minutes over. But yeah, anything else to add before we close out here?
Not really. Yeah, just keep an eye out on the market. We are trying to provide as many tools and trying to make them as actionable as possible. Like in the first version of our reports was very sort of tailored towards, hey, let's find out what's happening now, and not as much as actionable as it could have been. And so that's one of the feedbacks we got, and so we are building the second version, which is a lot more actionable. So one, keep that feedback coming. On the dynamic pricing side, we have been rolling out like plenty of new things. The multi-calendar is super helpful. The portfolio occupancy rules, if you're a larger manager, they help you set prices not just based on market data, but also what's happening within your portfolio. So do look at all the updates that we have been making. We send out an email every couple of weeks with product updates as well. But on all of these, just keep an eye out on the market, keep an eye out on what's happening in your portfolio, and tell us if what's being useful, what's not being useful, so that we can keep improving on the product.
Definitely, feedback is always appreciated. And we will be sending out a copy of this presentation, both the video and I believe the PowerPoint as well. So that'll take us a few hours to process, upload to YouTube, but you'll be receiving an email later today. So look forward to that.
Right.
Perfect. And everyone, do have a great rest of your week. I know it's Friday, so hopefully you have a sunny weekend. Hopefully we do keep seeing signs of recovery here. You'll be seeing emails about those new market dashboards when they come out. And I'm sure we'll be doing more webinars as kind of recovery keeps progressing to kind of keep you informed on these trends. All righty. Take care, everyone.
Yep.
See ya.